I am here. You can hear me. Awesome. Yes. Thanks so much
Wonderful.
for having me. I really appreciate the invite.
Very welcome. Where you're calling in from? New York, is that true?
I'm actually in Minnesota now.
Minnesota.
I'm a COVID refugee here, so it's 6 a.m. here. So it's
Oh,
bright and early.
all right. Well, we're so grateful for
Great
having
way to
you.
start my day. So wouldn't rather be anywhere else.
You
So.
couldn't find a better start, right? I mean, being live at our event. Aaron, very welcome. Grateful that you take the time as this kind of breakfast session for you. I would say take it from here.
Okay, absolutely. Well, yeah, like I said, thanks again for having me. Really glad to be here, and hopefully I can give just some high level, just some things to kind of think about as your event wraps up here this week, and as you're thinking forward to what's going to happen in the coming year. And so here at CoinDesk, obviously we are at the am I the right slide here? I think my slide's adjusted here. Wait, sorry. So 2020, so I'm going to talk quickly about just kind of what happened in 2020, how we got here, and then I'm going to fast forward to just like, what are we thinking about the next kind of 6 to 12 months. So at CoinDesk, we have kind of a unique vantage point in that we do events, we do multimedia, we do, editorial, we do all sorts of things. And then we've been, we're kind of covering all aspects of this industry, from the people to the technology to the markets to the kind of the intersections with traditional commerce and finance and things of that nature, and kind of like the global macro components. So we have a bit of a unique vantage point in that regard. And so I'm going to kind of just talk through sort of our view of like how we got where we are, and then like where it's all going to go. So I think 2020 was really sort of the banner year for Bitcoin and just crypto generally. I think in arguably this was sort of, it's a terrible world or terrible year for the world, like in general, but it's just really been a great year for crypto in the sense that I think the one lingering criticism that Bitcoin faced, pre-2020, I mean, it has overcome all sorts of other hurdles and tests and things over the previous decade, but had never actually kind of survived like a financial stress test, if you will, of an economic calamitous environment. Obviously people have been running around for years saying that Bitcoin is digital gold, it's an inflation hedge, an asset, et cetera. But you have really no way of knowing these things or proving these things until it's actually live in that scenario. So I think from the vantage point of a Bitcoiner or a Bitcoin enthusiast, like 2020 was a great year because it really played out exactly how we might have like predicted it to play out, right? In terms of there's the pandemic, there's economic calamity, there's just like money printing and fiscal stimulus, just going absolutely bonkers. There's lots of volatility. There's people rethinking assumptions about inflation and things of that nature. You have publicly traded companies converting their dollars on their balance sheet into Bitcoin. You have there's all these things just going on at once, and it's like, wow, like this is actually proving wow, it's like we were right. Like maybe we were right about this. We're onto something here. So how has Bitcoin responded to all these factors over the course of the year? I mean, you can see it right in this chart from our friends at Coinmetrics that I think the story of the second half of this year has really just been the growing institutional interest in the technology and in Bitcoin as an asset class, right? Here, just the names of people and entities have just been one after another. Paul Tudor Jones, MicroStrategy, Square, PayPal, Stanley Druckenmiller. Just earlier this week, we had Larry Fink of BlackRock, like the biggest, most important asset manager in the world, talking about Bitcoin. Yesterday, we had Paul Tudor Jones again talking about Bitcoin. So it just one after another, right? And so I think the big difference that we saw this year in this current rally vis-a-vis what we had in 2017 is just there's a lack of, the institutional interest is what was really driving the demand here. It's not just sort of retail people and people just who are your average kind of Coinbase trader or something. This is legitimate institution. One of the other proxies I like to use for kind of to gauge institutional interest in Bitcoin is the Grayscale Bitcoin Trust. And you can see here just over the last 12 months, even the last 9 months since the pandemic started, the number of Bitcoins held by in the Grayscale Bitcoin Trust has basically doubled, right? So this is all an extremely different dynamic from what we've experienced in the past, and it's really validated a lot of the theses that some of these crazy Bitcoiner types have been holding on to for a while. So 21 is kind of, I really see this as sort of a crossroads year in terms of just the progression of the technology and some of the narratives surrounding technology. So, obviously I say this kind of cautiously because, crypto people are kind of like notorious for making kind of outlandish predictions that don't come to pass. Right. And then, but 2021, I really see this as kind of the crossroads where everything's just kind of lining up. Right. And, 2020 would be a little too early to call it crossroads. 2022 would be a little too late, I think. And 2021 is really going to be the year that just sets the trajectory for this industry is going to be set in one form or another. So these are some of the key themes that we're going to talk about here in the next couple minutes. I think the most important one is really just this idea of, there's a couple of other things I just want to touch on before, kind of other meta narratives that play into this idea of like Bitcoin as a must-own asset. Really, I think you have fiscal monetary stimulus that is just, there's no signs of this letting up. I think the threat of inflation is becoming a lot more real to people, especially in like North America and Europe, where we've never, thankfully most of us have never had to deal with like the threat of, runaway inflation or currency debasement or these types of things in our lifetime. So it's not like really, it's like we read about it, but we've never really experienced it. But it's becoming pretty obvious now that a lot of the gains in equities markets and in real estate and other markets that we've seen over the last, year are just completely disconnected from the real economy, right? It's just so obvious. Like I just bought a house a couple months ago and it's already grown in value by $10,000. And it's like, that's not inflation. I don't know what is, right? You're also witnessing a continued loss of public trust in institutions and governments, which obviously was happening before the pandemic started, but it's been kind of exacerbated and accelerated by the pandemic. So I think at this point, it's like, regardless of whether you're for or against lockdowns or for or against face masks or things of that nature, like you have ample reason to sort of distrust, the quote unquote experts who are, sort of telling us what to do. And that's just a trend that we're witnessing throughout society, and people are kind of starting to, think like, okay, like how do I get out? Like, what are my alternatives here? Right. So, and I think that's been one of the big reasons that the institutional crowd has really warmed up to Bitcoin this over the course of this year. So, I think, there's an understanding that there's just as much risk as keeping your savings in fiat currency or buying into, this bubble stock market scenario as there is by holding Bitcoin. So what do I expect in 2021? I really expect the retail investor crowd to be coming back kind of with a bang. I think, a lot of these people got burned in 2017 when they bought in on the way up to 20,000 and they're a little gun shy. Maybe they all, I'm actually genuinely curious as to why there hasn't been a retail sort of, influx back in at the same level we saw previously. But maybe these folks all got kind of burned day trading, during the initial pandemic, the initial lockdowns of the pandemic. But maybe they're just tired and they want to do something else. But I do think that this will be the year where, for kind of like, financial advisors, especially in the U.S., investment advisors who are kind of the gatekeepers and the funnel for a lot of new investors and new money coming into the space. These folks have really taken an interest in that, in Bitcoin, and even at CoinDesk, we've been doing a lot of education for this particular class of people. A lot of interest growing here. I've grabbed a couple of interesting slides here from, this is a recent survey commissioned by Blockchain Capital, which is a VC in the US, about US customers and kind of just their Bitcoin buying habits and general awareness. I think the survey here is about, sample size is about 2,200 people. There's some pretty interesting stuff here that I think is a pretty good leading indicator of what we can expect to see in the next year. You have a lot of people saying that they're likely to buy Bitcoin. What I thought was most interesting is 38% of Americans expect Bitcoin to exist longer than the euro, and 58% of those aged 18 to 34 expect Bitcoin to last longer than the euro. So I'm not sure what exactly that means for you guys in the Netherlands, but I thought that was pretty interesting. And also you can see that, the 24 to 25 to 34 age bracket is, a third of these people would prefer to take $1,000 of Bitcoin rather than $1,000 of any of these other assets that they could have exposure to. So that was pretty interesting, I thought. And then also, just to follow on to that, this little chart is documenting just the propensity to purchase Bitcoin, and you can see steady upticks here. Among younger people, and even the 35 to 44 age bracket, you're seeing some fairly steady increases in likelihood of buying Bitcoin. So I think these are all pretty solid indicators that, the retail crowd's going to be coming back. This is an important thing. And so the other big issue that we're focusing on for 2020 or 21, is this issue of a Bitcoin ETF, right? And oops, I guess my image didn't render quite properly on this, but basically, we've been talking about ETF for like 8-9 years now, since the Winklevoss twins first started filing these applications back in like 2013. Dozens of applications later, we still don't really have one, but SEC Chairman Jay Clayton, who has kind of been the main financial services securities regulator here in the U.S., he's stepping down at the end of this year, and he's been kind of a big blocker in that agency toward a Bitcoin ETF. So there is a chance, and there's a lot of people in the industry in the U.S. betting on the fact that we might have a more Bitcoin friendly chairman of the SEC, which would potentially lend well for Bitcoin. And why is this important? This would basically just provide an easy, more compliant way for investors, and particularly investment advisors, to access Bitcoin, right? It's in a legally compliant way and whatnot. So it's a potentially huge on-ramp. The counter argument is that we'll get an ETF eventually, but it might not actually matter, because people aren't going to be sitting around waiting for an ETF to go buy Bitcoin. They might just go buy it anyway, right? So this is a big development that I think, it's been hasn't been talked about much in the past couple of years, just because Jay Clayton, there's no reason to talk about it while Jay Clayton was atop the SEC, but now that he's leaving, it kind of opens the door for some new things. The other thing is, I would argue this is probably the biggest event of the whole year in the crypto world, is the launch of ETH2, which actually just launched earlier this week. Perfect timing. And, obviously any of you who have kind of been playing around with, Ethereum or in the DeFi, any of the DeFi world, you experienced this huge run up in gas fees, right? Where, there was, $100 gas fees per transaction were not uncommon, right, during the third quarter of this year. And ETH2 really comes at the right time to help ameliorate some of that. And it's also just a massive breakthrough. There was a lot of skepticism that this could ever even happen. The migration to proof of stake, this was always kind of like a pipe dream. Can this ever happen? Can you actually, wrangle these developers and this community to coordinate and upgrade this platform together? Hopefully, so the good news is that Ethereum is growing. I think it's hard to bet against Ethereum at this point. It's as kind of this, internet money, kind of platform of the future of finance, et cetera. There's all these, I think ETH2 going live really sort of, in my view, puts kind of a dagger through the heart of the whole Ethereum killer narrative, kind of these other chains that are seeking to be Ethereum but better kind of thing. There'll still be a role for these chains, as there's always room for specialization and building bridges into Ethereum, things of that nature. But I don't think you can bet against Ethereum at this point. So the bad news, I think, is that the ETH2 transition is a very long process, and it's not going to happen quickly. It's a multi-year process, so we might be waiting a long time still. So that will be one of the things we want to watch in 2021, is just how, what is the progress being made here, and can this transition live up to it? Something like this has never really been attempted in human history before. It's a really it's a really fascinating project. So the other thing that we're really watching closely is just what happens with, DeFi emerged this year in the third quarter. It was a huge explosion. It was kind of a circus. It was a big casino. Some people got rich, some people got wrecked. There was all sorts of just crazy like meme characters and things on Twitter that were doing crazy stuff. It was exciting, but there's a lot of like real innovation here that I think maybe got a little bit overlooked in just the some of the crazy storylines that we witnessed, right? So the idea that this was all really kicked off in June with the launch of the Compound governance token, and savvy users kind of figured out that just by recycling funds on Compound, you can earn the Compound governance token for your just for using the platform. And then people kind of like copied that and ran with it, and it just kind of ballooned and spiraled. But the idea of audit market making, decentralized exchanges where your counterparty is just a pool of assets that you're trading with instead of an order book, is the ability to just bootstrap liquidity around a token without necessarily doing a token sale or without having to go and pay a listing fee to a Binance or somebody to get your token listed, which has kind of been like one of the main tenets of a centralized exchange business model. Just the ability to kind of circumvent that is huge. And that's not to say that centralized exchanges are going to be going away, but like it's just there's new options available for people to kind of the barriers to entry are decreasing. And also, what I personally find most interesting about all this is just the creative ways that people have developed to reward actors and participants for basically helping to grow a network, right? Like you get monetarily rewarded for helping to participate, for using the platform, et cetera. A lot of these people using these platforms are basically just mercenaries who are jumping to find wherever the highest yield was. They're moving their funds to that place, but anyway, so there needs to be some ways. So I'm really interested to see how this liquidity, how these projects and platforms can make their platforms a bit stickier, so that liquidity isn't just jumping around from platform to platform constantly. The second theme is China. I apologize. Sometimes some of my slide I think I had uploaded maybe the not final version of my slide deck into here, but basically. China is the elephant in the room here for a variety of reasons. The digital yuan, what they're doing with the DCEP system is, this is being piloted. It's being kind of demoed. It's being rolled out in small phases and in various aspects around the country. I think this is going to be. I think the whole world's kind of watching how this develops and unfolds, and we really don't I don't think we can even really begin to grasp like what the implications of this are. Like maybe it's not that big of a deal. Like we just don't really know, right? That's probably a subject of a whole presentation here. But and also the other thing that's a little bit less known about is this new project that they've been developing this year called the blockchain based service network. BSN is what the acronym is, and it's one of these things where it's not actually blockchain but more of an interoperability play where it's a centralized platform where devs can plug in and code and build applications. The idea is it's super easy to build applications. You can choose from a variety of different enterprise protocols. Things like Hyperledger has an integration here. Also some public chains that have been kind of modified because they have to modify the chains in certain ways because China doesn't like decentralization, so you have to keep take kind of a centralized version of like a public chain essentially, and they're exploring rapidly some smart city applications, energy conservation, identity and data storage, things of that nature, and it's co-founded by like the China Union Pay and China Mobile, and I think the idea here is that they're really trying to sort of recreate like an e-commerce equivalent of the Belt and Road Initiative, which is pretty ambitious, and I think they're set to have about 200 nodes up and running throughout Chinese cities by the end of this year. There's also an international flavor to this as well. There's obviously what China's doing is interesting, but it's going to, I think the more interesting question from my vantage point is how is this all going to play a role in like China projecting its power and influence throughout kind of the region and then also, the rest of the world. So like BSN nodes are already deployed in places like Australia and Singapore and Brazil, even in France, over in Europe. So how does this kind of, do the DCP and the BSN, do these end up being kind of the the backbone of kind of Chinese sort of power projection or the infrastructure of this power projection throughout throughout the world as we kind of move into a bit of a more multipolar landscape geopolitically. So there's lots of interesting kind of geopolitical questions that come up here. I think how does the U.S. and the West respond to some of this stuff? I mean, at this point, I don't really think the West has put maybe enough thought into what all this stuff actually means, mainly because we have a lot of our own problems we're trying to deal with. I think one of the things that might end up happening as a result of this is that actual nation states kind of seek to get a bit more involved with as far as holding Bitcoin, or we have corporations getting in the act now, so why wouldn't the state actor? And I think another interesting trend here is really just how does this impact kind of the what's the impact on just the sovereign nation state system, like the Westphalian sovereignty system we've lived in the last 400 years, where there's a sovereign bordered nation state. And I think I think one of the interesting things with DeFi was that it literally made no difference where you were in the world. As long as you had a VPN and internet connection, you could participate in all these schemes and all these projects. And most of the time you had no idea who you're dealing with. It didn't none of that mattered. I mean, it was totally a total super sovereign thing, right? So I think anyway, so there's lots of interesting kind of geopolitical kind of sovereignty questions to grapple with here as this all progresses. CBDCs is obviously going to be a big one this year too. I mean, COVID-19 really catalyzed CBD research and development this past year, and at this point, I mean, I don't have any way of empirically proving this, but I think it's fairly safe to say that pretty much every central bank in the world is at least looking at this, right? Or is at least researching this they're devoting some resources to better understanding this, if not going all in. So, I mean, there's too many examples of projects to note here quickly, but there's lots of potential. There's lots of potential for financial inclusion, for kind of stimulus, UBI type payments, things of that nature, more just frictionless, just ease of use for payments, and just kind of reducing some of the barriers there. And then there's lots of just kind of dystopian stuff that goes along with it as well, right? What happens to the cash economy, where you pay your babysitter under the table just in cash, right? I mean, in a lot of countries, even in developed countries, I don't think most people realize just how much of the economy still is just sort of based on cash. And I pay my neighbor to come blow my to rake my yard or to cut my grass or something, that kind of thing. So what happens in that type of world where and then obviously what happens if what happens to the financial privacy aspects of this, where if I'm how do I know that all my transactions are going to be private and not sort of used against me for some sort of social credit scheme, et cetera. Which takes me to the last theme here, which I've never been a huge sort of privacy geek or gung ho about this or anything. I thought it was always kind of the people that were really into this stuff were kind of weird, or just very extreme. But I think 2020, I think this is really causing people to. I think we're due for a narrative shift around privacy. And I'm really excited to see just how blockchain and crypto and kind of the the core ethos of the guiding principles of blockchain and crypto can really kind of help set the narrative here. So it's really not just about ZK snarks and privacy enhancing technologies, but it's really about just a narrative shift where I think we need to shift from it needs to shift from being an opt-in feature where I'm going to opt to be private when I use this service, and it needs to shift to a default feature, right? And I think the interesting question is how can that be incentivized? How do we reward how do we kind of reward people and companies who choose to operate outside of the whole kind of surveillance capitalism economy, right? They choose to kind of buck some of those trends, right? And I just think like around, or these concepts of like contact tracing and things. I mean, I think a lot of people are just not really comfortable with this, right? So it's like, look, if you want to know what I go buy at the grocery store, like that, like whatever, I don't really care. But if, I don't really want, it publicly known to everybody, or to the government, or like, Google or whomever, just who I'm interacting with, and if I've been exposed to somebody with COVID, and it's like, okay, like that's a little, I don't necessarily want people to know that stuff, right? I think that's kind of getting people kind of thinking a bit more about this. And I also think that like you have just like I mentioned earlier, just decreasing trust in governments and institutions, right? And I think the U.S. elections are a good example of that. And the way I've been kind of thinking about this is just that, you can't really be, with declining trust in government institutions, like it makes it harder for governments to just control people by telling them what to do, right? Because people will be like, no, I don't trust you. So then the government will have to resort to more kind of, heavy-handed or maybe more intrusive tactics to control people, right? Whether it's through kind of surveillance or, things of this nature, and people will resist that and say, we don't want that. And then they will demand more privacy. And then the governments will then seek to, crack down on end-to-end encryption, which we're already seeing right now for public safety reasons. And, so it's, I think we're kind of entering into this cycle where there's going to be a lot of interesting developments here, and I'm curious to see if people, generally speaking, outside, the general population, it embraces some of these ideas that people in crypto and blockchain have been talking about for a while. I think the counterpoint of that is that, it seems that over the years, like, when people are faced with the choice of privacy or convenience, do I use Google for my search, or do I use DuckDuckGo or some other, less effective search function that will protect my privacy, supposedly? People seem to choose convenience, right? I think that's kind of, we've seen that over and over again, right? Where people still use Facebook, even though Facebook does all these terrible things with their data or whatever. So I think the counterpoint is that, there's only going to be a small subset of the population that actually really cares about privacy. So I don't know. I'm curious to see how this all plays out. So that's about all I had prepared for you. And I think I'm about out of time here. So thanks again for having me, and hope this was informative.
Right. Aaron, many thanks for your introduction, for your keynote. I think, you're one of my favorite news outlets when it comes to blockchain news. So for me, it was really interesting to learn what you're actually looking forward to in the upcoming year when it comes to blockchain technology. So many thanks for this. And it's also interesting to have you as one of the last speakers of this week, as we got like a variety of speakers from Chainalysis, Consensus, but also from countries like Dubai, South Africa, and so forth, to really learn from their sides what's going on, what are their challenges, and of course, how do they see the foreseen future of blockchain technology. And it's really interesting what you mentioned about privacy. We see the plummeting trust in governments and institutions and so forth. But on the other hand, and that was very interesting what you just remarked, is that Facebook is still being used. It seems that most people don't care about their privacy. I'm very curious to learn what your take is on that. But it's the same what most people tell me here in the Netherlands, what I hear a lot also from Western countries. You're from the US, I'm from Europe, that most people don't care also about the financial infrastructure, like as long as it works. So maybe this is also, the case why the crypto adoption in these Western countries is not that high yet compared with the African countries, the development countries, for example. How do you, what is your take on that?
Yeah, so on the privacy point, I mean, I agree. I think it's one of these angles where, people just, for the most part, it's like, I think there's something with human nature where it's like we always just want to take the easiest way out, like like the easiest, whatever the easiest path is, like at this moment in time, I just want to go down that road, and part of it is we were never actually, told like, so, okay. So when we started in the, mid 2000s, when everyone was sort of being programmed to, join Facebook and like live your life on Facebook, we were never told of kind of the Faustian bargain that was like, oh, by the way, you get to use this great platform, but like we are going to, as Facebook or whoever, we are going to be, using your data and harvesting it and surveilling you and, selling you ads, all these kind of crazy things. Like this was never part of it. This was never explicitly outlined to people, right? I mean, if you would have made that, okay, here's option A, like you get to use this amazing free platform, and then, but if you'd have made like the pros and the cons like abundantly clear at the outset, I think a lot of people might have been like, well, that's like, why would I want to just give these people access to my life? Like, that's crazy. Like, why would I trust Mark Zuckerberg with that? And I think, the fact that, people were kind of preconditioned into it. And then all of a sudden, like people are living their whole lives on Facebook. And then it comes out like, oh, by the way, they're just sort of surveilling you and doing all these crazy things with your data. And you are the product and they're just selling you to their clients. And they're getting rich off of you, basically. And people are like, well, that's kind of shady, but, it's really convenient platform. I really like it, So I think there's just something with human nature that, I mean, there's got to be enough pain involved to force people to change, right?
Yeah.
And, I think my hunch is that, I mean, just in conversations I've had with lay people the last couple of months. I mean, like where I live, like our state government just came out with a contact tracing app that they're encouraging everyone to download, right? Where it's, you download this app and then it'll, beep or whatever if you come into contact or if you're in the vicinity of somebody who's tested positive for COVID. And I've just, a lot of people have been kind of just mentioning this haphazardly, like, wow, this is kind of creepy. Like, I don't really want them knowing like where I am, or I don't, and I think, I think there needs to be, I mean, and I'm not like saying like we shouldn't contact trace or we shouldn't, have public health, like common sense public health measures in, but I'm just like, I think just this is forcing people to think a bit more. This might introduce enough pain into people's kind of regular lives to, or enough awkwardness or discomfort to where like, okay, maybe I need to think about this a bit more. And it almost kind of goes back to the point I was making earlier about inflation as well, where like here in Western countries, we've never had to deal with inflation before. We've never had to deal with like a runaway currency. So we've never, like, we read about these things in textbooks, but we don't like actually know what it's like.
Yeah.
But now it's like, okay, like there's just money printing like crazy. And, maybe the price I pay for, like a gallon of milk is the same, but like my house just went up by, my house has literally gone up by like $10,000 in just like a couple months with like nothing, like there's no, there's nothing, like there's no, like people aren't like kicking down the doors to come move in my neighborhood. It's just like, there's just so much, like the housing market is just going out of control right now. And asset markets across the U.S. are just out of control. So you can't tell me that inflation isn't real. Like I'm witnessing it. It's just not, it's not like, what you might expect it to look like, I guess. But
so talking about Facebook, right? You just mentioned Facebook and all privacy issues. In January, Facebook, they of course initiated Libra, that was renamed to Diem. Financial Times mentioned that it will be launched in January. What is your take on that? What do you see happening with this launch? Because it was quite controversial. They have been working closely with the US authorities, of course, on this. How do you see this? Like, what do you think will be the first steps? Because there's like only known that it might be launching in, might launch in January. Do you think they will start in the US with using the Diem coin, or how it will be named? Or do you have more intel on that?
I'm not sure if I have any intel specifically. I have my opinions, which I think I lived in Washington for 10 years. I was a political journalist actually before I came into crypto. So I have, my immediate reaction was once Facebook started rolling out this project in 2019 was, and just like the mad, just reactions that they got from congressmen and people in Washington. is that Facebook, it's kind of like your classic example of just like technology, like Silicon Valley hubris, right? Where they think that we're the smartest guys in the room, like we're the, everyone's just going to follow what we tell them to do, basically. And I mean, they really did not realize just how much they are hated in Washington. And it's not, and I don't think it's necessarily like this, like just seething hatred for Mark Zuckerberg. I mean, it's like, I'm sure he's a nice guy, like, but it's more of like, just politically speaking, like they're just the ultimate piñata for everybody, right? Conservatives can crack down. I mean, conservative people can, it's like they're like a piñata, right? You just hit them and then candy comes out, right?
Yeah.
And for conservatives, it's like you say, like, well, Facebook is bad because they keep, they are censoring conservative speech, and they're kicking people off their platform who have don't have like leftist political beliefs and all these things. And then the Democrats come out and say Facebook's evil because they helped Donald Trump win re-election and all this stuff. And there's just, everybody can score points by just trashing Facebook, right?
Yeah.
And it's just easy. It's just easy money on the table. Like, why would you not just trash Facebook, right? And surprisingly, like the Facebook, like I'm sure they have lots of lobbyists and government affairs people, but like it's like they did not realize this, right, going in. So I mean, my point the whole time has been like, if the Libra coalition had been founded by like PayPal or somebody,
yeah,
this wouldn't even be like a controversial issue at all, right? It would just be like, oh, that's innovation, know. Yeah. But because Facebook's involved, everyone's all up in arms about it. So I mean, I think the rebranding is smart. I mean, I think they had to do it. I mean, I think it's the way that they've restructured the project is it's not nearly as ambitious as what they were first proposing, right? The whole kind of global, stable coin kind of weighted, and they had, I mean, I think they just ran into too many, I mean, the problem that they're trying to do is like, is like, you can't be, they're sitting here on one hand saying like, we're going to bring all this financial inclusion to everybody. We're going to make, we're going to, all these people that can't get bank accounts, we're going to be providing them with financial services. It's going to be amazing. Yeah. Then on the other hand, they're like, oh, we're also going to comply. We're going to be fully compliant with all AML and KYC laws and all these things. And, and it's like, look, you can't have both. It's like the reason all these people like in, wherever are unbanked and they don't have bank accounts is because they can't pass AML, KYC verification. Yeah. So it's like, you can't, so they're in this awkward position where like they're saying that they can do these two things that just simultaneously that just can't possibly coexist with one another. And, I guess I'm unclear as to how, what they're proposing in their current model is like really going to, I don't know. Like I'm assuming what they're proposing now is just kind of they just want to get up and running, right, and get some momentum going, and then kind of build out. But
all right, let's go from the one pinata to the other pinata, Bitcoin, because it's really interesting. You just mentioned what has been a great year for Bitcoin and lots of other cryptocurrencies. And yes, we've seen, of course, the spike with all the institutional investors that have invested like massive amounts. That definitely also led to this the rise of the price from like I think a 4,000 up to almost all-time record $20,000. We have a great year ahead, also when it comes to retail investors. That might also join again. It was interesting that you were asking, that you're raising the questions, why did retail investors like me, for example, did not step back in the game again? I'm really curious to learn from your perspective. Like I would think like most people still remember 2017 when we had this sudden spike also in December, and then it crashed. Lots of people lost a lot of money, especially the retail investors. So I guess most people are still scared. Still see a lot of scams now, also with the DeFi projects. Lots of them that get hacked or are just straight away like scams. What is your take on this? Why do retail investors still wait with their big flow of investments?
Yeah, it's a good question. I mean, I don't really have I've been thinking about this a lot. I don't really have like a clear and concise answer, but I have a couple of thoughts on it. I mean, I think first is just like, yeah, these people just got burned. They just wrote it off as a scam back after 2017. Maybe, here, at least in the U.S., in during the beginning of the pandemic, when the government started issuing stimulus checks to people, there was just a surge in day trading on like people opening Robinhood accounts and Schwab and E-Trade and just brokerage accounts, like retail brokerage accounts, and people are just being paid to sit at home. So there's no sports. So what are you gonna do to entertain yourself? Like, well, let's go day trade in the stock market, right?
Read CoinDesk news, right? We're not.
Yeah. So and then you had people, so you had just crazy stuff going on in just traditional stock market, right? Where like these bankrupt company like Hertz, the car rental companies, like this bankrupt company, people were just it was like this massive game of chicken where they're bidding up this this share price on Hertz to like this bankrupt company to crazy amounts, and maybe it was like people just got burned. Like all the speculator crowd just kind of got burned on some of this day trading stuff, earlier in the year. Maybe they got tired of it, or and then so they're just out of gas and they're not interested in Bitcoin. So I mean the other thing I've been thinking about is like I find like kind of the retail mob, I guess, if you want, that's kind of a derogatory term for it, but like I feel like there's a kind of class of people that they always kind of go from like one fad to the next, right? Yeah. So in 2017 it was crypto, and then in 2018 it's like cannabis, and then it's like there's always like this new thing that people are trying to sort of rush into ahead of, be the first ones to go in, or they want to be the first of their friends to like get into this thing, and then they can go and see how much money they made or whatever.
Well, talking about
maybe it's like
I'm very curious. Well, talking about what is next, because we have to wrap up because of the time and the next speaker. We're talking about the next year. You recently launched the Internet 2030 series. Really interesting series on what is next. How will the internet look like in 2030? What do you think? We've discussed privacy, we discussed financial inclusion and so forth during your keynotes. What is the key role? What is the most exciting thing that you are excited about where blockchain can play a vital role in the future developments on the internet?
I mean, what I'm personally most interested is kind of what Filecoin is doing, and this the decentralized storage. And with the full caveat that like I've tried understanding Filecoin, and it's it's really complicated. I can't like really wrap my head around what they're doing. But generally speaking, with this idea of just decentralizing, I mean, I think like. I mean, at this point, like I'm less worried about, like Facebooks and these types of people as I am about Google, right? I think like Google, like finding ways to minimize reliance on Google is going to have to be, I think for any kind of internet savvy, like Web3 consumer, like you have to find ways of just not relying on Google, which is ironic because CoinDesk, we're this, supposed to be this Web3 media company, and we're all of our, we're using Google Suite for, email and Google Drive and all these things. So but it just shows like how ubiquitous Google is right now. And I think, but there's no real alternatives, right? And there's minimal alternatives that would offer the same functionality. So I think so I'm really excited about like what Filecoin is doing. And I think, I really like what say like the Brave browser, the Opera browser, where you have actual wallets like built into the browser. With Brave, I can earn BAT tokens just for like reading ads and things of that nature. I'm not, still waiting for those coins to, appreciate in value, but it's cool. It's a cool concept, like I get like crypto people like getting paid to just do stuff, like it's like, oh, cool. I can earn coins by doing something, so I think so it's kind of like this migration away from Google. I'm not saying like Google should be abolished, but like just how do we minimize like our just like over reliance on Google? I think is really the key.
So we can say like the decentral future. So the way from the central platforms like Uber, Google, social media outlets, etc., more in a decentralized manner where it is more controlled again by the user instead of one central authority. I think I'm summing it up in the right way for you.
Yeah. And these aren't necessarily like, novel or like exclusive insights for me or anything. People have been kind of talking about this for a while. These are ideas that have been around a while, really since, beginning of crypto. But like, I think I think people are realizing that stuff is like, it's a lot harder to unseat some of these incumbents than maybe we realized,
Yeah.
So,
yeah.
But there's a lot of smart people out there. There's a lot of, but the other thing, the other final point I should make, I guess, is maybe just like, I think we're witnessing right now just the power of the network effect, right? And even when you're talking about like why do people still use Facebook? And it's like, well,
Aaron,
it's
Aaron, talking about smart people, I really, really appreciate all your input, but we are going to listen to another smart guy. He's already waiting for us for quite some minutes. So I think we can talk for hours, but I really have to step in here. I really, really like to hear all your thoughts, but we have to move on. We have another speaker left. So I would really like to thank you for your contribution, for the great outlook
Thanks so
that
much
you
for
gave.
having me.
Yeah, thank you so much again, Aaron Stanley, CoinDesk, one of the leading blockchain news outlets in the world. I will definitely keep on following you guys. Looking forward to Consensus in May, of course, in the upcoming year. Wishing you all the best over there, and let's stay in touch. Have a great day.
Same to you. Cheers.
All right.
Thank you.